G'day folks, it's Jim here from Orchard Forex. It's Saturday the 18th of September. When markets are now closed for the weekend, the US dollar headed to 3-week highs. The dollar index was up 0.4% on the day, 0.6% on the week. Really underpinned by the stronger data that we saw coming out of the US during the week. The retail sales on Thursday in particular gave the dollar a bit of a boost. And this all happens as we head towards the FOMC meeting, which comes up on Wednesday. And we look forward to the prospect of seeing whether any further announcements are going to be made on tapering of the Fed's asset purchases, which kind of expected to commence probably November, December, sometime like that. We've got no definitive data at this point in time, but that's certainly underpinning the dollar. Bond yields are heading higher as well, and that's putting pressure on the stock markets. Both the S&P and the Nasdaq headed down about 0.9% on Friday, and they look as though they probably have a bit further to go on the downside, if anything, I think, in the coming week. We're going to have a look in a minute. Commodities also, they had a bit of a tough week, particularly the metals. Gold and silver both headed lower. Iron ore prices are falling quite rapidly, and oil gave up some of its gains on Friday. It's had a pretty good week, oil, but it did come off about 0.8% on Friday, and we wait now for further developments next week. One thing we need to look out for, I think, in the coming week is what's happening in the real estate market in China. Evergrande, one of the really big property developers over there, it looks like it's going under. It's got enormous debts, and it faces making an $80 million coupon payment this week, which doesn't look as though it's going to be likely to be able to do. So the prospect of contagion with foreign investors might loom on the horizon. That might further pressure stock markets. So the Hang Seng's having a tough time of it at the moment, and that could have further repercussions as we go forward. So it's worth keeping an eye out during the week. But in the meantime, we'll go and have a look at the chart, starting with the dollar index as per normal.
Okay, folks, here we go. Start off with a weekly chart of the dollar index, and as you can see, we had a bit of a rise on Friday and throughout the week, and finished at 93.25. Realistically, since June, we haven't really been out of this sort of 93.70 to 91, sort of 70.80 level. And that may well continue. The weekly indicators do suggest we could have further higher ground, but this level here is going to continue to be resistance, and I very much doubt we're going to break above that at least until Wednesday, the FOMC meeting. But that's still 60 points above where we are now. But I kind of like the upside. I think we are going to keep on pressuring the top side, and any announcement on tapering will only add acceleration to the dollar's move, I think. So if we come back and look at the daily charts, actually before I do that, I should say that if we do break above this at any time, this level here, sort of 94.5 level, where we've got the 38.2% FIBO retrace, as well as the 100 and the 200 week moving averages, that's going to be very, very strong indeed. So I wouldn't expect to go above there this week. We've also got these previous highs way back here in 2020, so that is going to be resistance if and when we see it, but we really need to get above this particular high here, which was at 93.72 by the looks of it. So anyway, we're going to have a look at the dailies. Okay, so here we are with the daily chart, and the momentum indicators reasonably flat, but possibly pointing a little bit higher. The dollar finished on its high of the day, and I think any dip back down towards these levels now, sort of just under 93, I think that's probably a buy. Looking for a rally up towards this sort of 93.75, but I don't think we're likely to take that out ahead of the FOMC meeting, if indeed we do at all. So, but if we do, then I do think we can head higher. Now we'll move forward to, I'll have a look at dollar Swiss first, because that's really leading the way here. And here we have a 4-hour chart of dollar Swiss. Now at the beginning of Friday's trade, we were sitting around this sort of level here, which was really a kind of a double top from going back to July. So having broken higher, we actually went quite sharply higher to this 93.20 level, and I think there's probably further in it, and this is leading the dollar. The 4-hour indicators look positive. The dailies are building up steam. But we have got this long-term trend line coming in here. That started way back here in April 2019. So that's going to be initial resistance. But if we do break above there, then I guess we can see a peak up at this around 94.70 level. So this will be resistance. But I'm looking to eventually break that. If we go out and have a look at the weekly charts, we might find it tricky to break early in the week. We're up against 38.2% retracement level from this peak up here, and also we've got the 100 week moving average. But if and when we do break through that, there's, as I say, there's not an awful lot before this sort of 94.70 level. So I kind of think that's where we're heading. The weekly indicators not showing us an awful lot really. But if anything, they're maybe pointing slightly higher. But we are making a series of high lows, and I do think eventually that's the way we're going to progress. So without further ado, we'll have a look at the euro. So here we have a 4-hour chart of the euro, and really that's only come back down to levels seen at the end of August. So it's not doing anything huge, but the 4-hour charts are pointing lower. As I say, I think dollar Swiss is leading the way, so I do think we're going to come down here. We're going to come down, I think, and test this level here. That's sort of 116.60, 70, something like that. If we go forward and have a look at the daily charts, we can see here that this 38.2% FIBO retracement level up from here, that has acted as pretty good support. We've made various attempts to break through it, haven't succeeded. But if we do head below this, this is at basically just under 117. This low back here, 116, and then below there the 50% FIBO level is up to under 115. The daily indicators aren't showing us an awful lot at this point in time, so I wouldn't get overly excited, but certainly I prefer to sell rallies not on the day on Monday. If we saw anything really above where it's 117.25 at the moment, if we saw 117.5, 117.75, I'd probably sell it there for a quick trade on Monday with a stop loss probably back above 118. But I don't really think we're going there. The high on Friday was 117.88, and so I think sell rallies, but keep a tight stop above 118 would be my plan. Okay, so that's that. Moving forward to dollar yen. And I'm not really going to waste any time on dollar yen. It remains within its range, as I said last week. I think you buy it at this sort of 109 level, and you sell it up here. If it gets, if it gets above here, this sort of 110.40 level, and with a stop loss above 110.80. And in the meantime, I think we're just going to continue to see choppy range trading with not an awful lot going on. The 4-hour charts may be building up a bit of steam for a stronger dollar. The dailies are completely flat, so there are better things to look at, and we're really pivoting either side of the 100-day moving average at the moment, and I don't really at this point in time see any reason why we should do anything different. Keep an eye on bond yields. If bond yields do head sharply higher, US yields that is, then the dollar will continue to move up. If anything, I do prefer to buy dips, so we're at 110 at the moment. On Monday, if we saw it down at 109.50, I'd probably be a buyer down there, buy it further at 109, but keep a pretty tight stop, I think, under there, so 108.80, 108.75. Okay, so that's that. Sterling. I'm not going to really waste any time here on sterling. This is a 4-hour chart. Much the same applies as with the euro. I'd probably be looking to sell rallies. We're at 137.25 at the moment, so I'd probably look to sell rallies towards the 137.75 with a stop loss above Friday's high, 138.12. That was, so I'd have a stop loss of 138.25. But I don't really expect it to get there. The 4-hour charts, as I say, are beginning to point low, and the dailies, as you can see, are pretty much in neutral. So I wouldn't get too involved in sterling. We've got this 200-day moving average. That's sitting, where's that sitting? Around this 138.10 level. So 138.15. I don't think we're going above there. So look to sell rallies. On the downside, the previous lows, they come in just above 136. So that'll be my medium to longer term target. But we're not likely to see that ahead of the FOMC meeting, I don't think. Okay, so what else we got? The Aussie. Okay, so the Aussie's been in this medium-term downtrend. We had this corrective rally, but that seems to be over now. It looks pretty heavy as the US dollar seems to be gaining strength. The 4-hour charts are pointing lower, if anything, and the dailies are not showing us a great deal. I do think the Aussie does remain heavy though, and I think a test of sort of 72 down here, and possibly even eventually to this sort of 71, 10, 15 level that we got down to. That might be on the cards at some stage down the track, but at this point in time, I'd look to sell rallies. As far as Monday goes, I think I'd probably be looking to sell rallies towards well, 73, anything really above 73, 73 and a quarter perhaps, but with perhaps a stop loss above this level here, so 73 and a half. I don't think we're going close. If anything, I think we'd probably like to have a test of this low down here. That comes in at sort of 72.20 or so. And beyond that, I think we probably can slowly grind lower. And if we take this level out, well, in that case, 70 cents might be on the cards, but that's a long way down the track, and possibly not until we see any further clarity on tapering, which might push the US dollar higher. But until then, look to sell it above 73, and this target down here is 72.20, with a chance of taking that out on the downside. Okay, so that's the currencies. Looking forward to the stock markets, and here we have a 4-hour chart of the S&P, and stocks don't really look very healthy to me. As I pointed out last week, we had this long-term rising trend line, and we've come back below that. We did chop around here during the week, but we've come back down here on Friday and had a pretty heavy close at 44.20. We've actually closed below this FIBO support, so I think we can possibly head back down below 4,400. I think the 4-hour charts, as I say, they're pretty heavy. Now the dailies, here you can see this long-term trend support, and if I blow this up, we've actually closed below the 55-day moving average, and I would suspect we're probably heading back towards, well, initially towards this low here. That's about 43.60, but I think the 100-day moving average could come into play at 43.30. The indicators, as you can see, are pretty heavy, and the weeklies, as I have said on many occasions, are overbought and looking particularly toppy. So I think trading the stock market from the short side, I think, is probably the best trade going at the moment. I think it's probably easier than the dollar. I think the dollar is going to go higher, but I suspect it'll be pretty choppy. Stock markets, I think they seem to me to have more clarity in the trade, and I think we probably do head south. I'll go and have a look at the Aussie market, which looks almost even worse. So here we have the ASX, and that had a terrible day on Friday. It came off 1.5%, closed on its lows, below the previous lows back here, and starting on Monday, it doesn't look very healthy at all. I think there's going to be more downside to come. Where are we going to go? If I just change these FIBOs around a second, it would appear early in the week that we'll see minor support, FIBO support here at 72 3/4, and then again at this low back here at 71.65. I hope we're not going there. I don't think we're going there early in the week, but the indicators do point out the next degree of FIBO support. If I enlarge that to draw off this particular low back here, you can see we have closed below the 38.2% FIBO level of this particular rally, and the next level down here, FIBO level, would be the pivot is at sort of 72.30. So we're going to have a look at the dailies. That might offer a bit more clarity. Okay, so as you can see, we've closed pretty much on the 100-day moving average, slightly below it, if anything. Let me just blow that up a bit. So we're pretty much on the 100-day moving average. But if we do break through, then eventually this red line here is the previous all-time high pre-COVID. Let me close it back up. So you can see back there. So that's at sort of 7,200 or thereabouts, and I wouldn't be surprised if we, at some stage over the next week or two, we go back and test that. It's not going to happen before the Fed, I don't think, but I do suspect that's probably going to be a target, at which point I think it'll probably be a buy again for the next move back up. But the Aussie market's being heavily affected by the iron ore price, and that's coming off at a rate of knots. So I think if that continues early in the week, the downside is pretty much locked in. So as far as positioning goes, I'd now be looking to sell it at 73.50. I'm doubtful that we actually get there, but I'll be looking to sell it at 73.50, probably with a stop loss above 73.80 or so. The daily indicators are not telling us an awful lot actually, but the weeklies, once again, overbought and look as though they're heading south. So I personally think that as a test of 7,200 is probably on the cards at some stage. Okay, so now quickly onto the metals. Okay, so here we have a 4-hour chart of gold. Gold had a tough week, having got squeezed back above 1,800. It fell out of bed after the stronger dollar, the retail sales on Thursday, and it's chopped around above 1,750 ever since. The 4-hour indicators do look heavy still. If we break this 1,750, we've got minor FIBO levels down here, so 1,735 and 17, sort of 10-15 area. As far as the daily charts is concerned, the 100 and 200 day moving averages at just above 1,800, they continue to provide quite a strong cap. As I say this, as I think we could move back down here. We've got this 38.2% FIBO level here. That's sort of 1725 if we do go through 1,750. These lows back here, though, I think they could well come into play at some stage. 1678. That really depends on the Fed and the prospects for a stronger dollar. But if we're right in that we are going to see a stronger dollar down the track, I wouldn't be surprised to see these tested. The daily indicators do look as though they're trying to point lower. The weeklies are not telling us an awful lot, but we're sitting on the 100-week moving average here as well, so that's going to provide some reasonable support early in the week. And I suspect gold will chop around here at least until Wednesday, when the Fed announcement comes about, and then it'll take its direction from there. But right now, I think a break of 1,750 is probably the most likely move, with a run back towards 1,725 and possibly even towards 1,700, but we have to wait and see on that one. Silver looks much the same. I'm not going to go into that now, but oil, and here we have a 4-hour chart of West Texas. Now, having broken above this descending trend resistance, it's moved quite sharply high. It gave up some ground on Friday to close back at 71 3/4, but during the week it got up here to above 73. 4-hour indicators at the moment are pointing lower, so it wouldn't surprise me to see a bit further on the downside, maybe come back towards sort of 71, 70, but it probably is going to be a buyer down there if we do get there. Further out on the daily charts, we've got this the 100 and the 55-day moving average are meeting here at just under 69. Let me blow that up a bit. They're meeting here at sort of 69.5, 69.50, something like that. I'd keep a stop loss on any long positions below that level, but the daily indicators do look positive. There's been a couple of reports out during the week that oil is heading towards $100 a barrel over the next few months. So I think that's worth keeping an eye on. If global growth numbers do look as though they're getting their act together, then there's more chance of that happening. In the meantime, I think if we were to see this sort of 74 level, and particularly if we see 77, I'd probably be looking to sell into that for the time being. I don't think there's any rush. I don't think we're immediately heading towards 100, but I'll probably trade that range. If you were to get long at around 70, as long as your stop loss doesn't get taken out at 69.5, I'd be looking to sell at the moment at an approach on this 77. But if we ever broke that, then I think it's a different ball game, and we probably are heading higher, but I think we've got time on our side for that. Okay, so that's about it. We'll have a quick look at the calendar. Okay, here we have the calendar, and Monday's going to be a particularly quiet day. Really, there's nothing going on at all that's likely to affect the market. The German PPI might provide a little bit of interest in the euro, but that's going to be about it, and I think it's mainly going to be a day of positioning ahead of the FOMC. Coming into Tuesday, we have the RBA minutes. They'll be watched fairly closely, but elsewhere there's not a great deal going on until the US get in, and that's really just housing data. Then on Wednesday we've got the PBOC interest rate decision, their monthly setting, and we've also got the BOJ meeting, so that'll be closely watched as well. But the main event really is going to be the FOMC meeting, which takes place late Wednesday, early Thursday in Asia, so we can expect a pretty volatile session then. And then following that, as Thursday gets underway, we've got all the flash PMIs coming out, starting with Australia and then working through Europe and eventually the States. In between all that, we've also got the Bank of England. They've got their monthly policy meeting, so that also will be closely watched. Later on Thursday, a little bit of regional Fed activity from Chicago and also from Kansas, as well as the jobless claims and, as I say, the flash US PMIs. And then it all goes fairly quiet on Friday. We've got the news, Kiwi trade balance, inflation numbers coming out of Japan, the German IFO, some more housing data, the US new home sales. But that's really about it. But all eyes are really going to be on the FOMC meeting, and that's going to drive price action throughout the week, really. So we'll leave it there for now. Good luck with your trading this week, and we'll talk to you next week. Cheers.